What's up, traders? I am back both on YouTube and from vacation. And I wanted to talk about some of the things that I've missed talking about to my viewers and give some updates on things that I talked about before the channel went away. So, first of all, this was a notification that I got from YouTube without any extra information, but it's validating. I know I did nothing wrong, and thanks to my benevolent tech overlords, I now have a platform back. But that makes me aware of the fact that I need to find other alternatives. So if you haven't already, make sure that you do follow me on TradingView, which is where I more or less blog my ideas, but also look in the description below this video for my Discord. That is where I am online every day talking about ideas and sharing my trades. And a lot of people follow me based on this recent banning. I appreciate it. So I just got back from Puerto Rico, and it was an interesting trip. Very, very beautiful. And one of the things going on there, they have a mask requirement, but for the most part, the place is open. So a lot of live music and things to go and see. I really enjoyed getting out and being around people. Like, once again, I actually went down there thinking possibly it would be a place for me to live, because I don't know if people are aware of this, but you don't pay taxes on capital gains or dividends, which is big for me. But that comes with certain drawbacks. Basically, to sum it up, Puerto Rico is like America with a lot more freedom, and that means freedom to not obey traffic laws. That there's a lot of one-lane streets depending on where you go. Not in San Juan, but we stayed in Rincon, which is kind of the surfers' paradise. Beautiful, but a little more rural. The people there were very, very nice. Didn't cost that much to spend the vacation, at least outside of San Juan. And I will definitely go back. So highly recommend it to people that want to check it out. Don't need a passport if you're an American just to go there and try it. So what has been going on with the things that I've talked about in the past? Well, Tesla was the last video that I put out. I'd actually recorded that before my channel went down because I wanted people to be aware of the put selling strategy. And as time has gone on, Tesla has just not done very much in the last 3 weeks. This is the ideal situation for selling premium or selling options when the stock is not moving, but because it's Tesla, the volatility is still pretty high. Again, I'm still looking for that 480 level, and that's based upon the halfway point of the move from the COVID low up to the high up here. It also matches up with the Ichimoku cloud on the weekly. And what I'd be looking for to happen is price to maybe continue to consolidate and then eventually come back down here. As long as price stays above 480 and above the cloud, I would say that Tesla is still bullish on the long term. And if you go back and you look at my other video about Apple and how when it pulls back to 50% levels over the last 20 years, it's been great buys. Well, this is another thing that I'm looking for that to happen. So I'm still maintaining that strategy. Either wait for it to come to 480 to buy it, or sell puts until you get filled, or you don't, and make money on your money. So the next thing to take a look at is the consumer staples. Now, the other video I put out was about sector rotation, and I put that on March the 3rd. And so if we use this tool right here, this is a link I've tried to make. It's on a website, Stock Charts, where you can do a perf chart, performance chart. Look for this, and over these last 2 weeks or more since I made the video, of course, technology has continued to decline, and consumer staples, the sector that I was looking out to outperform, has in fact begun to outperform. Healthcare, less so, but putting money into Procter & Gamble and Johnson & Johnson was a smart choice, as opposed to buying more dips of technology. Yes, they were dip opportunities, but they're just not performing over the last few weeks. Some interesting things going on right now. Utilities are actually the winner of the last few weeks, which is actually a rather bearish sign because utilities are often seen as the safe play because they are not going to go out of business and they're going to keep delivering returns because people are still paying for electricity, paying for water, paying for trash. And oftentimes in down markets, this can be a bellwether of a market decline as people are moving to security, and that being utilities. But 2 weeks is not really enough to assess it. If we look back a little bit further, let's just say a 30-day, energy still was the leader, industrials, materials, just like we saw in the last video. But you can definitely see how the shift has happened where more is going into consumer staples and more into utilities just in the last 2 weeks. People are moving to more security as the market has gone down over the last few weeks. Again, Procter and Gamble made that video at the beginning of March, right around here. It's up a good percent from there. Johnson Johnson, same thing. Uh, hit on the beginning of March and is up. So very good technical levels that I liked to see at, and it also fit my sector rotation thesis. So what is the market doing? That's the question I've seen in Discord the last few weeks. What is going on? Like, why is the market not up every day like it was in 2020? Well, my message to people that are wondering this question, what's going on? The answer is we just returned to normal. So back in 2017, when I was trading, I've traded for many years now. I remember this being a unique year because it had the lowest volatility of any year in like 100 years. And what that means in regular terms is basically by this statistic right here. The absolute daily percentage change for the Dow Jones Industrial was 0.36%. So understand, 0.31% 2017. So it was on a day-to-day basis, on average, it never moved more than 1/3% up or down. And so that just creates a very slow year. You're just not going to see big moves. Now, of course, this is the stock market as a whole, but even among tech, the average percentage change was still the smallest in 2017 at 0.44%. And when that happens, you're just not going to be able to make money on fast plays that people got really used to playing. People got used to playing their weekly options. You just can't do it this year. I'm sorry, but you're just going to have to get over it. What you need to be focusing on is longer term plays. So if we look back at what the SPY is doing right now on an Ichimoku level, it's pulled back to a support. And what that support basically is the halfway point of this low we had in March, that dip up to the high we made, and there we've held it. Let's just take a look at this with a little bit less clutter and see. So this is the month of March. We basically today, this morning, came back and hit the support for the month of March that we're in. And we're kind of coming off of it. Now, I don't know what's going to happen, but today may have been or may be, with about an hour left, a good day to put on some longer term bullish positions. That doesn't mean weekly SPY calls. It does not. What that means is you need to be looking at opportunities in stocks for 3 months, 6 months out. Play around with it. If you got used to last year taking weekly options, try to find some low value stocks. I mean, one stock that I think is good for traders to start playing around with is, of course, Ford. Now, a lot of people are bullish on Ford, and over the last few weeks, we've had a bit of a pullback. Where I'd like to see it pull back to would be something maybe on the year, so not too far away, maybe about the 11 level. But at that point, because it's such a low dollar value stock, it's $11, you should be able to take options pretty far out and them not cost that much. And then get a feel for how these long-term options work. Yes, just like all options, you're going to have a lower probability of success. But with these long-term options, some of your winners are going to be very big. That's the nature of the game when you're buying premium, when you're buying options. You're going to have a low win rate, but some of your winners are just going to blow out of the water your losers. And I'm sure if you play weekly options, you saw the same thing happen. The difference with longer term is you have to be patient. And that's going to be hard for a lot of people because they want their money now, or they got about 30 minutes to gamble a little bit on the market. That's not investing. And in my opinion, that's not trading. That's you just trying to play for fun. If you want to grow your account, if you want to really capture some gains and build wealth, then you have to think long term. Even if you look at the people like Deep fucking Value, Roaring Kitty, the person that made all this money on GME. This wasn't a one-time YOLO option he did. He's been playing this for about 2 years. Same thing with the guy who I forget his name, played Tesla all the way back from 2018, and now he's got $50 million. The thing they have in common is they made a lot of money, but they did it over years, not weeks. So get it out of your head that you're going to get rich on weekly options. Focus on these longer term options, more than 30 days. Over 45 days is really better, but I'll make a video about that in due time. So just wanted to leave you guys with that update. Don't be panicking about the stock market. Like I said, 2017, let's just go back and look at that real quick. This right here was 2017. From here to about here. And so that's a pretty low, that's about a 19% move that the SPY did. But in context, it was just a slow grind upward. And what it followed was a period of really high volatility. And so what did we have? Well, in recent times, we had a period of very high volatility. And now the market is doing a slow grind upward. Now, anything can happen, but this is just what I've seen in the years past. You're just not going to have big swings that you can play. You got to think more long term. So I'll leave you with that. Trade wisely, and I'll see you in the next video.